Hello, 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 everyone. Good morning. Happy Wednesday. How's everyone doing? Good morning, Patrick. Hey, Gary. Good morning, Dave. Good morning, George. Worrisome Wednesday, huh? I'm just going to bring on Bob right now. Bob has a few things to say. We're just going straight to Bob Iacchino. He's on right now. Well, then we'll get to some other price market action. We had the ADP numbers come out, the GDP numbers, some PCE numbers. So we'll get Bob's take right off the bat.
What's up, guys? So I just want to do this real quick and then I'll jump off and let Mike go on. I'm looking actually in part at the dollar index, but I want to go over this data real quick. So GDP came in a little bit stronger than expected. This is a revision um, to the Q2 GDP, okay? And I'm sorry, Q3 GDP. And it came out a little bit stronger than expected. Also, the price index quarter over quarter came out a little bit stronger than expected. And remember, these are revisions. So when it says previous 9% on there, that was Q2. Okay. So the revision, the forecast was that it would be about 4.1 versus 4.3, which is what come out. 4.1 was the expected revision of the last number. So it's not as dramatic on a quarter over quarter basis as it looks on this particular display. Same thing with the previous was down zero point 0.6. We all know the first estimate of Q3 GDP was not negative, it was positive. 2.7 was really the last. It's one of the only data sets that does that because there's multiple revisions. So you're really looking more closely at the forecast versus the actual. So in other words, Q3 GDP is getting stronger. Bonds actually ticked up in yield right after this data and then ticked back down. So I said, why did it tick back down so quickly? And then I looked at the rest of the data for the day. Okay, I had a TD Ameritrade TV spot this morning, so I prepped for that. I didn't right away go look at the earlier data. When you scroll up, Mike, to the data overnight, the global economic picture was all weaker. Okay, so you had Japanese housing starts negative 1.8 versus 1.1 last month. Okay, that was not only worse than expected, but way worse than the last read. Okay, Euro area inflation lower than expected, not only on the year over year. Okay, and this was a flash piece of data on the euro area. The euro area inflation rate came out at 10% year over year. It was forecast at 10.4, last at 10.6. But the month over month, this is flash November. Okay, the month over month inflation rate was negative. Okay. Then you look at the German employment situation. The unemployment change was 17,000. Now they do it differently. They list the number of unemployed. Okay, they don't list new non-farm payrolls added. And it was expected at 13,000 unemployed added to the unemployment rolls. It came out at 17,000, and last month was revised lower. The unemployment rate came out at 5.6. It was 5.5, and it was forecast to be unchanged. It came out weaker. And when you start to look at all of that and you include US ADP, which does not correlate very well to non-farm payrolls, okay, it doesn't. But the ADP was expected at 200. It was 127 versus a last of 239. The global economic picture is substantially weaker in this particular day's set of data. Okay. So I suspect the GDP isn't going to have a lasting effect. But in that backdrop, now it becomes more important to look if Jerome Powell still says, we don't care about what's going on in the rest of the world. We're focused on inflation here. Okay. He's obviously speaking today. It's a high value economic piece of data. The fact that he's speaking, it's rated as high value, and it is. As Mike mentioned in yesterday's live stream, it's likely the last speech before the quiet period. It is for sure the last important speech before the quiet period. Okay, because no matter what any other Fed speaker might say in the next couple of days before the quiet period starts Saturday,
Yeah.
it's Powell. Okay. So, and many Fed speakers have said the size of the rate hike is up to the chairman. Multiple Fed speakers have said that in the last month or so. So watch what Powell says and relate it to this global data, not just the GDP data that we got or the ADP data that we got. He's not going to be able to speak on non-farm payrolls because he's speaking today, and that obviously comes out on Friday. So that's really all I wanted to point out. Today's the day to look at it in the context of everything. Okay. Oh, now Coco says wait 5 years. Okay, whatever, Coco. All right, that's all I really wanted to say. All right, now Coco says wait 5 years, not buy the dip and it'll be higher this week, or the pivot is here, or all the other stuff you said, Coco. I love you, Coco. We missed you yesterday. All right.
All
Any
right.
questions before I jump? I don't think there are, but that's all I wanted to point out.
Let me just, we'll wait a minute. Good morning, Anissa. Good morning, Christoph, Andrea. And then Bob, Dave says good morning to Bob. Options 22, Ted. Sterling's in the house. I'm not seeing any new questions, so I will take a look at the markets going into Powell. We have PMI coming out at 8:45, very minor, but then it's going to be really the Powell speech at 12:30 Central. All right,
Hey,
Bob.
for tomorrow's live stream, I'm going to send you a chart, Mike, showing people who bought a dip and 5 years later there was no profit. It's just for Coco.
Okay, perfect.
Admittedly, it's going to be curve fitting, but I'm going to do it.
Here, Bob, what are some key words you should pay attention to for Powell to say?
So I don't know about keywords, but the theme is likely to be higher for longer. Okay, that's what the theme is likely to be. So keep in mind that we had rates near zero for what, Mike? 10 years?
Yeah.
I don't know why people think that the Fed funds rate can't stay at 4.5% or 5% for at least 3 or 4 or maybe 5 years. So I would watch Jerome Powell's focus. His emphasis has always been on inflation is still high and we have more work to do. His emphasis now is likely to be on rates need to stay higher for longer. So look for something within that sort of heading for outline points underneath that. Exact phrases, I don't know, dude.
All right, there we go. Thank you for jumping on this. Thank you. We'll see you tomorrow.
Yep, tomorrow afternoon.
Yep. All right. I am back. Thank you everyone for tuning in. So, got to be on your toes today, especially over when the markets thin out during lunch when Powell is speaking. So far this morning, again, we've been up, we've been down. Bob is still strong. Ooh. Energy stocks still rallying. That's the big stuff. You can see energy so far up this morning, then consumer cyclical, then basic materials. Fed watch tool. Last it was about 70-30. So pay attention to this too. If you're not already doing it, it's on the CME Group's website. Just look for the Fed watch tool. Just search for it. And watch how that changes during or after Powell's speech. That's going to be key. Fear and greed still in greed mode. Gamma, we're in negative gamma territory. Now, this isn't a huge gamma curve right now, but it will still have an effect. So, any rally or sell-off can potentially be amplified due to dealer hedging and a big gamma wall at that 4K. None of that has changed. I told you I was looking at Hormel this morning. Pretty big gap down. They beat on EPS. They missed on revenue, which is very interesting. Maybe they're not. I have to go do a little more look into that, but maybe they're not able to pass as much on to the consumer with continued price increases after the close. We got Snowflakes and Salesforce are the bigger ones going into today or this afternoon. So far, you can see inside day from yesterday. Inside day, key little thing, we had this little breakdown. We had the little rally right before the numbers came out, then the snap sell-off, hitting the first little target on this double, this very mini double. These are the levels I will be using through the opening, coming right back down to test the breakdown area. So again, these are very minor. The key one I'm watching is this 39.53 final little target for that. And that's right into this area we got yesterday with pretty significant buying pressure. There's a lot of buying pressure just below this 39.51. So on a dip to there, watch for potential support. If it does drop below that, the key area I'm watching right off the open is back down to 39.43 in this area for a potential snapback move. And those are your minor levels. On the bigger sense, the breakout zone, I'm watching for a break above about 39.75 and a successful retest of that level, because then we could have a minor breakout. The next target, besides using 4,000, is roughly 4,008. And then on a bigger rally, let's say Powell comes off a little more dovish. Remember, we still have a gap fill to the upside. So that's my overall bigger magnet, not just for today, but on any continued rally this week, 4,032.50 and then 40.50. On a bigger breakdown below that 39.43 area, watch for 39.32, 39.31. It's the bottom of the rotation zone, and so many algos key off that area. And then we'd have the key support from the 17th of November. I will be focusing on that low, not only because it's the prior breakout area from back at the end of October, it's also we still have the potential double top in play. With daily cycles now, we've had a pullback to get daily cycles back to the bottom, but it's not been a huge pullback yet. Can this still run lower? It can. It's all going to key now off of with those numbers coming out between ADP. And a lot of those ADP numbers, I know Bob didn't cover it, but there was some pretty substantial layoffs in manufacturing. And if you didn't have the increase in food services, i.e. like waiters and wait staff, you would have had that ADP number would have been way worse. So you're losing better jobs to go into what would be lower quality jobs, i.e. losing manufacturing, going into food services. NASDAQ, inside day so far, key area is trading right there. I'm going to bump this up just a bit now to right around 11,575. And then it slams into about 11,610 area, but above there you could get some more traction. Key support on the NASDAQ is 11,500 to about 11,475. Those are your key support areas. NASDAQ also still trading below. We got this little channeling pattern, but it's trading below the short-term resistance. So in order to get any traction, it's really got to get above this 11,575 area. And that's pretty substantial at that point. We'll get to spiders and the Qs in a second. Dow, very small range. My breakout level is about 33,950. Breakdown, major breakdown area I'm watching is 33,583. Russell, inside day also. The key thing on the Russells, just watch yesterday's high and low for the breakout or breakdown going into the Powell speech. The spiders, so, you know, a slight gap up potentially this morning from yesterday's close, but on a rollover play in this morning, watch for the gap fill to the close, 395.23. And then major support would be yesterday's low. A break below yesterday's low, the target is 391.50. The breakout level I'm utilizing is roughly about 397.30 area. 397.30, and then my target will be 399. Why? That was the gap down on Monday. On the Qs, by the way, the double top, the potential double top on the spiders is still valid. The Qs, slight gap up. So the first thing on any pullback, 280.57. And then it would be yesterday's lows, 279.17. We start breaking below yesterday's lows in the Qs. You do have a clear path move going down. Next target area would be the gap up price from CPI Thursday of the gap open price 276.01. On the overhead area, I'm just essentially using yesterday's high, which is coming in at 283.35 to 283.50. Above 283.50, my target will then be 284.90, and then we've had this gap fill already, but it's going to be a magnet price again, about 286.92. I agree, earnings are going to be crappier for the first quarter. So that's where we sit with the notes. Little pullback here. You see that overnight little doubled, no close above that, confirmed, but no close. Little confirmed tick there, no close, and then the quick little snap back down. So we still have the potential double top in play within the potential already confirmed double bottom hitting the first stop play. If we do break down with the Powell speech, the rotation zone on the daily and this 112.04 is the key support. You get even a tick below 112.04. It's confirmed a double top, but it needs at least that 4-hour close to trigger. It preferably needs a daily close. That 4-hour is a little ugly there. And cycles still have room to run to the downside. Dollar index, pay attention to this also. So far, inside pausing bar after a little 3-day rally. So I'll be focusing on yesterday's high and low. If it does break down below 105.70, probably more bullish for the market. A break above yesterday's close is your first warning sign at 106. The VIX right now, I'm still watching this 2330. Then I will be watching yesterday's highs. Yesterday's highs coming in with the key close from Friday the 11th. So that's my next target, and it starts trending above there. I will be shifting to more bearish mode. I will be shifting to more bullish mode, and not necessarily for today, but if this starts breaking down below 2165, then we have the potential gap left behind. Remember, I'm watching for a longer term, more basing pattern to get put in. Crude continues this run up. Yesterday was the aggressive percent B buy. Front run pattern to the potential double bottom. Double bottom still needs 82.36 to confirm and a daily close above that level, and preferably above about 82.65 where the rotation zone is. Euro, the double top, potential double top is still in play. That's about the only thing I'm watching for now. Pound holding the rotation zone. So unless this breaks below about 1950, 1945, if it does break below there, my target is 118.20. Bitcoin trying to rally this morning, but still in consolidation mode. I'm interested to see if it can finally get the close back above 16,950. Tesla, little gap up this morning, so it would be the gap down, but until it can either break above about 185 with some momentum, a break above 185, my target is 188.50, and then 191.80 area, which will be key resistance. Besides the potential gap fill, the only thing that shifts me short-term bearish is below 179.12. Remember, you still have a gap left behind. All right. So I think that's about it. I just want to peek at, boy, I can't type this morning. There we go. Apple, slight gap up. So really, that's going to be another stop I'm keying off of, because even any rally back to the first cross of the rotation zone, we still have a gap left behind, but now this is key resistance. So that's the only thing I'm watching. I'm really watching with Apple, because if Apple starts breaking below yesterday's lows, we still have this gap behind. And remember, probability wise, we should still target 136.78 and then the gap fill. So, and that's such a large mega cap. If this continues down, the market sustains the weakness. All right, little peek back at the S&P going into the open. That's about nothing new. Not much new. Let me just get to this 1 hour. Yep, but this 39.75 area is going to be key to the upside. And then it has to retest that level for the successful breakout. You are welcome. With that, I shall talk to everyone after the close, unless something catastrophic happens with Powell speaking. If that did happen, I might jump on. So pay attention to the Discord channel. Gary says Apple will be up because I sold it yet. Well, yeah, Apple is, all the other Apple traders are monitoring what you do, Gary. So you got to keep that in mind. You're welcome, Jacob. And I shall talk to everyone later. Bye for now.